All right, we got Will. Here we go. Will, what's oh, let's go! New camera?
Yeah, man, I'm not fooling around.
All right, let's jump into on-chain metrics. What you got for us this week?
Sure. So this week I actually had our good friend Nick Bhatia featured. So it's a little shorter than usual because we actually hit the limit on the newsletter for Substack. But so first off, we have our URPD chart that we like to look at pretty often. This is basically just on-chain volume. And so what you see here is that we have four pretty distinct clusters. The first is kind of the pre-bull market cluster between 3K and call it 11K. We have one while we were consolidating, in that little mini bear market, whatever you want to call it, between May and mid-July. And that cluster is between 30K and 40K, obviously. We have the one we're currently in, which is between 44K, 50K. And then lastly, we have a smaller cluster above us. This is kind of the last zone of resistance, I would say, between 53K and 60K. And so we actually got rejected last week off of the beginning portion of that upper cluster.
And so on this right here, how should people think about these clusters? What does that tell you when you look and identify them?
Yeah, so one way to think about it is this is where market participants kind of built up their cost basis, right? So you'll see the gray line, the gray bar, that just means that's where we are currently. That, as you can see, that's the largest bar of volume since 9.5K, all the way on the left-hand side of the chart. So that's just showing there's a lot of capital inflows at these price levels. There are also a lot of capital inflows between 30 and 40K. And so to me, this is showing, you can kind of identify support resistance areas where people bought in, right? Because, when we come back and when we retested, this cluster on the right-hand side and we retested 53K last week, that's where a lot of people had bought in. So obviously there's going to be overhead supply. And this is essentially when you're mapping resistance levels, it's very similar to the premise for technical analysis, just saying there's people that bought in here. So once price gets back up to that level, natural market psychology says, people are going to take profits that held all the way down. They're okay, well, got it back up to my cost basis. I'm getting out of here. So I don't think it's super surprising to see some rejection off of that initial test of that. But that's the way I think of it. It's just, this is kind of where capital inflows came in at different levels.
Got it. And then what about supply shock ratios? It looks like we're continuing the same trend.
Yeah, just seeing pretty much continuation here. We're kind of started this next impulse, I guess you could call it, as you'll see in the liquid supply shock ratio. This is essentially just tracking movement of coins from weak to strong hands. And this is defined as entities based off of their spending behavior. And so liquid entities take in a lot of coins, don't move many out. Highly liquid and liquid entities are moving coins in and out all day long, right? So you're tracking the movement of coins from those entities that are moving coins in and out all day to those strong hands or long-term investors, however you want to think about that. This is also the metric that Pomp, I remember back down in mid-May or early June when we were talking about this bullish divergence and people were calling us crazy. But this was one of the main metrics that we kind of used to call the reversal down there. And so as you'll see, we had two impulses, one kind of right above where it says June 28th, one above July 26th. And then recently we've just got this third kind of impulse where we just moved up actually yesterday as well. But I'm watching to see if we get follow through. I'm suspecting that'll probably play out over the next couple of weeks. But also you're seeing an uptick in the red line. It looks like it's smaller. It's just because, to be honest, I put it on the wrong scale, but it's of the same magnitude as the blue one. This is tracking the movement of coins from the highly liquid entities. So these are the people that are really in and out of the market all day long, right? A lot of this is probably market makers. And then the movement of coins from those entities to what I consider more of the short-term investors, right? These are people that are that sell less than or sell more than 50% of the coins that they take in. And highly liquid, by the way, is they sell over 75% of the coins they take in. Illiquid is less than 25%. So you're seeing the movement of coins in this red line from those highly liquid entities to liquid. And then you want to see that translate into blue, right? So you want to see coins go from highly liquid to liquid and then move into a liquid. And so you are starting to see what looks like some translation from the red, seeing that uptick. And so what that's just saying is that the coins are moving from liquid. I'm sorry, Jesus, from highly liquid to illiquid. So that's a good sign. And then we have our purple line. This is the exchange supply shock ratio. So what you're looking at here is a lot of people get this misconstrued. This isn't the percentage of overall circulating supply that is exchange balances. This is subtracting exchange balances from circulating supply. So you're getting the amount of supply that aren't on exchanges, and then you're running a ratio of that to the amount of coins that are on exchanges. So essentially similar to our liquid supply shock ratio, right, which is measuring weak to strong hands. Here you're measuring the amount of coins that are available to be bought on exchanges to the amount of coins that you can't buy. And so like seeing this uptick is basically just another way to look at the fact that coins are moving off exchanges. In the last week, we have 26,150 roughly, it's 148 if you want to be exact, of coins that moved off exchanges, totaling roughly $1.25 billion at a 48,000 Bitcoin price. So you're starting to see continued coins move off exchanges. Coins are moving to these, longer term investors, which is of course a good sign. And I mean, this has been pretty much up only since kind of mid-May, right?
So when you look at the whales, you take people who've got more than 1,000 Bitcoin and you take out the exchanges, people that we know have the exchange wallets. It looks like the whales are going absolute bonkers and buying Bitcoin right now and soaking up whatever they can buy.
Yeah, so if you look at this, I know in the chart I put in there that you have up on the screen, it's kind of zoomed in, but if you go back to like mid-May, whales did a lot of the selling on the way down. And I think a lot of that, this is a whole side thing, but I think a lot of that had to do with like some arbitrage opportunities that closed, because that kind of aligned with where we saw the number of whales and whales holdings drop off. But yeah, since like late July, you started to see whales, pretty aggressively buying. And as you mentioned, like what we're looking at here is all the entities. So this is forensically clustered addresses, which are what entities are. And then you're filtering out, as you said, exchanges, and then also like Grayscale, the Purpose ETF, also QBTC. And so you're just basically getting the raw, whale balance. And so what you see here is that since July 17th, which is 2 months ago, whales have added 184,699 BTC, which is roughly $8.8 billion. Once again, using that $48,000 Bitcoin as the reference for that.
When you look at the ASOL, remind everyone what ASOL ends up actually being and how you look at this. And then what is this chart telling us?
Yeah, so what we're looking at here is we're trying to track the age of the coins that are moving. And so there's a couple ways you can look at this. I just decided to throw an ASOL because I hadn't put that chart in the newsletter for a while. But you want to kind of use all these metrics in tandem. So for example, we have like our spend output age bands, our spend volume age bands, coin days destroyed, dormancy, liveliness. And each of these different metrics have a different purpose. So for example, like ASOL is just the average of all the spent outputs on a given day, but there's no weight given to it by volume. So, if you have what appears to be high spending from older coins, you need to also look at the volume of which they're selling, because if they're selling like 0.001 BTC, then who cares, right? But if you're seeing the volume of and that's where you look at the spent volume age bands, and also you can look at like coin days destroyed. You can see the volume of older coins is perhaps increasing or decreasing, and then look at is that in correlation with like the ASOL or your spent output age bands, which are literally just looking at the average or the average in case of ASOL, but also spent output age bands. You're just looking at the amount of spent outputs on a given day. So, nuance, yada, 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 but it's just saying you need to use these different age related metrics in tandem. But overall, the conclusion here is just the fact that long-term holders are sitting tight, right? We're seeing declining in the age of the coins that are being spent on each, on every given day over the last, call it, week or so. And so you see that in tandem across the board in all these age-related spending metrics. And that's just the kind of point I was trying to get out here. So a lot of the spending is coming from these younger coins.
Got it. And when you look at the futures market, I know that there was a bunch of futures and derivatives that played into some of the price movements previously. What are you seeing right now in the futures market?
Yeah, so on-chain is obviously like it tracks broader trends, right? And so for these kind of short-term price fluctuations, obviously you need to watch like short-term price structure, but also derivatives data. And so last week we got a complete flush in the derivatives market. We had, this massive, liquidation cascade. Since then, we started to see a recovery in funding and then also in futures open interest. So futures open interest has recovered by roughly $1 billion from the wipeout, but it's still $3 billion from where it was at before we had the sell-off last week. And then also funding is slightly recovered, but it's still pretty far from where we were at, leading up to that cascade last week. So, keeping an eye on some of the stuff, like you can just watch basic, just watch funding in futures, open interest. And if you see like a large increase in both of those, perhaps that's the time to be a little more cautious in the short term, right? But I think like, and this kind of goes into the next chart, the broader on-chain structure, in my opinion, like when looking at these supply dynamics, when you have things like, supply that hasn't moved in at least a month, hitting an all-time high at 93% of supply hasn't moved in, at least a month. You have long-term holders supply hitting an all-time high. A lot of these things are just, in my opinion, undeniably bullish for the coming months. But perhaps, on the shorter term time frames, you can get these liquidation driven moves because the liquidity in the futures market is massive. So it has a large impact on price in the short term.
When you think about the current state that we're in, I think over the last couple of weeks, we've really talked about this kind of supply squeeze. It seems like about 90% of Bitcoin hasn't moved in the last 30 days or so. Only the earliest, youngest coins are being sold. The whales are buying up as much Bitcoin as they possibly can. Is this just a recreation of a lot of the market dynamics from October of 2020, which then was followed by like a 500% move? Do you see a lot of similarities between those two things?
Yeah, for sure. Like, I think like a lot of the metrics that like I'm looking at, they kind of resemble the end of like a bear market almost. And so like my kind of like framework for the current, like where we are right now is kind of that we're transitioning out of like the latter half of like a bear phase for the market. But, like zooming out, it kind of appears some things are, saying that we're kind of in like the middle of a bull market. So I guess the way I would frame it is that we just came out of a mini bear phase within a broader bull market structure. But like a lot of the things when you're talking about the supply dynamics, as you just mentioned, are in fact like resembling kind of mid to late, 2020.
I like that. Joe, John, what questions you guys got?
What's going on, Will? Appreciate you coming on, man. I got a quick one about hash rate. So we saw it fell about 50 to 55% earlier this year with everything going on. It's recovered aggressively since then. We're probably about halfway back, so maybe 20 to 30% down from its all-time highs. But how do you think about Bitcoin's hash rate in terms of future price?
I guess the way I would think about it is just, as more hash comes on the network, like miner profitability goes down, right? Like when hash first came off the network, like North American miners were super profitable because there was less competition for the same amount of block reward, right? And so as hash has come back on the network, that profitability has, not in a big way, but it's started to get more constrained, right? As you started to see it recover. And so I would suspect like you're going to see some like marginal selling from these miners, perhaps as they need to cover their CapEx, but like at the same time, now they have, so much access to the capital markets, they can just raise capital to cover their operational costs. So it's I don't know, it's hard to say because part of me thinks they're going to have to sell some of their BTC, and miners have been selling over the last, call it 2 weeks, because their profitability is getting a bit constrained as hash continues to come back on the network. But at the same time, we know like miners now can just borrow as much capital as they need, and they can tap into the capital markets that way. So I don't know, man. Like it's hard to say. I those are kind of like my two arguments though, for and against, if it has a positive or negative effect.
Gotcha.
John?
Yeah, Will, what's up? Thank you for doing this. We all know you're big time now, so so I have two questions. One, can you just talk about kind of the resistance that Bitcoin has? I read the other day that people were kind of calling the resistance at 46,000. And then also, can you talk about, so from February to May of this year, it apparently seemed that a lot of whales were kind of building short positions and distributing their long positions to push out retail traders. Can you talk about that? And if we're seeing what we saw in February kind of now?
Sure. So like, I think on a short-term basis, I kind of look at like these levels. They're created by a guy on Twitter called Spaceman BTC. So shout out to him. But it's looking at like the weekly high, monthly high, daily open, monthly open, these like shorter term key levels, right? And so we've broken out above the Monday's high and also the monthly open. And then we come back down and now we're retesting the monthly open. So if we can move back off of this retest of the monthly open right now, I'm kind of looking at a move up towards the previous monthly high, which is around 55K. And we're also above the 200-day, which is another kind of like key level that I think a lot of like legacy finance is probably watching. But the key level from like a technical perspective for me is watching this point of breakdown, which we broke down out of in May. And so that's, right around 49K, call it. Because for me, like that's important because you're showing, price, the market has now decided that it's moving above where it decisively moved, down into this mini bear phase in mid May. So if we can get back above, call it 50K, which is also just a psychological number, that would also mean we're getting above the previous monthly high and also the point of breakdown. And so if we can move back above that level, that would be a really strong sign for me. But in the short term, like I'm watching this retest of the monthly open, see how we react. But I feel pretty confident here. Also, obviously from an on-chain perspective, but seeing that we're now sitting above the 200-day and just broke above Monday's high, and also we did break above the monthly open, but as I just said, we're now retesting it. But yeah, what was the second question? My bad.
No, you're good. Does this look similar to what we saw in February? So someone mentioned in the chat about how maybe some whales are building like shorter positions and distributing their long positions to push out retail traders. I'm curious what you think about that.
It's hard to say. Like one interesting thing I have been watching though is like Bitfinex. Like I watch sometimes like the heat maps of like the bids and asks. And it's interesting, like it seems like the large Bitfinex buyers almost always get their bids filled. So that's been one interesting thing. And like whenever their bids get filled, you also see like an uptick in on-chain, like the whales holdings as well. But I don't know. It's hard to like say if they're like moving the market or not. But I guess the only thing I would say is just that seems like whales are kind of getting their spots picked pretty well, and they are getting their bids filled. So I don't know. I think it's like hard to make that conclusion, but I definitely don't think that it's anything against that argument that I've been seeing.
Cool. Well, last question. We'll let you go. Prediction changing for end of year? Or are we still on track for a big blow off top here?
No, prediction hasn't changed. I don't know about blow off top though, but I think perhaps like this run stretches out into like Q1 of next year. But yeah, like I think the supply dynamics though, from like a macro perspective, are setting up for a really strong next couple months. Obviously, it depends on if we get some catalysts with some announcements, or there's been a bunch of chatter about this supposed ETF announcement coming out, which I'm not an expert on any of that stuff. So we'll see how that goes. But from just like the pure supply dynamics standpoint, I think we're setting up for an exciting next couple months.
Awesome, man. Don't have too much fun this weekend. We appreciate you.
Thanks, man. You guys take it easy.
Thanks, later, buddy. What's up, guys? Bang, bang. Thanks so much for watching the Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of the Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/Pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of the Best Business Show tomorrow.